Hey, what's going on, guys? Today is Saturday, and we are going to do this Robinhood portfolio review. So, today I'm going to talk about what's been going on with my portfolio. I know I haven't made a video in maybe about a month or so, but the reason why I haven't made a video is because I just try to tune everything out. You guys know what's been going on in the markets. There's been a lot of selling, there's been a lot of panic, but what I try to do is I try not to look at it all. I try to just weather the storm and just hold on to my stocks because it's really easy to get caught up in the selling wave and start making moves just to be making them. And there are some moves in the portfolio that I have done. If I see a stock like, for example, Home Depot that gets all the way down to about a 13 times earnings price to earnings ratio, I definitely we will start moving money there. But let's quickly recap what's been going on for the past week. I'm actually up 12%. So the markets have been rebounding here due to that stimulus plan that the government is putting out. Is worth about $2 trillion. So meaning the market really like that. They like to see that the government is putting money back into the economy. So that was pretty good. But for the past month, I am down 14%, and in the past 3 months, I am down 21%. So my portfolio was no exception. I tanked along with everybody else's portfolios if they held on, and my portfolio actually got down to I think it actually got down to 30%. Let me just check here. So it keeps going down, 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 and then my portfolio actually crashed. So if you're looking at the statistics, my portfolio was once down 31%. So that is officially a crash. My year graph shows that I'm down 8%, and my all-time chart shows I'm down 4%. So one thing I just want to quickly say, guys, is that everyone looks smart in a bull market. Everyone tries to just make trades in a bull market and think that they can just hold on to their stocks and the stocks are going to go up, and reasonably so if it's a bull market. But for some reason, you get caught up in the wave and you think that every year, as long as you buy into the bull market, that you're going to receive a return. That's what I was doing in a previous video. I got caught up into that storm that stocks are going up, and if you look at the previous video, I was just buying everything. I was buying like Texas Instruments, I was buying Facebook, I may have bought Amazon. I was just going crazy, but I wasn't humble about my cash reserves, and I just kept buying. And then when this coronavirus really just broke out and really started to spook people, because in the beginning it really wasn't spooking people. The market was still going up, but when it really got out that when the virus hit over to United States, and states were starting to get infected, and then the virus was just tail spinning out of control. People just started to lose their minds. People in the store started buying up a whole bunch of toilet paper. They started buying up hand sanitizer. If you look on the shelves, eggs were gone, milk, bread, and now the grocery stores are like limiting one item per customer. You can't even go to the grocery store now and just buy up toilet paper, because for one, there is none. If you go like extremely late, I had to actually get up early in the morning just to shop, basically. So, yeah, they're limiting one item per customer, and I've never seen this before. This is just absolutely ridiculous what this pandemic has cause people to really hold on to their reserves. And pretty much everywhere you look, everywhere you have been, it's quarantines, and absolutely insane. But we're here to talk about stocks, guys, and I'm going to go ahead and just review the portfolio. So let's go to it. I have Apple at 247 right now, and my average cost is 179. So, and my total return is still 37%, which actually is surprising to see because the markets have not been doing very well. I think just in the past 1 or 2 months, we've seen a crash for many stocks, and many stocks have gotten down to extremely valuable P/E ratios. We're talking about maybe 8 times earnings. I've seen some companies drop down to five times earnings. It's absolutely ridiculous. But Apple is still, to me, a little bit pricey here. It has a PE ratio of 20, and I'm not going to buy more unless it actually hits down to my average cost or maybe about $150 of fair value. So I'm really just holding on to Apple. I didn't, lose my mind. I didn't panic sell it. I'm just holding on to the fort, and I may have held on Apple for about a year now. I'm not entirely sure on that, but again, past month down 13%, and for the past 3 months down 14%. So it definitely corrected. And if it gets down to 20%, it will officially hit a bear market. So let's go ahead and review AbbVie, $72.70, and my average cost is still $65. Now, this stock actually did go back down to around $64, I believe. The last time I looked, it was actually around 67. Yeah, so you can see a lot of volatility from March 4th all the way down to March 23rd. That's when that huge drop really sat in, and with that huge drop sank in, and a lot of people sold. Companies were just getting abused everywhere, and it was absolutely insane. But I'm still holding on. My total return is still up 10%, and it's really not much to say about them other than I don't know if this is a pure coronavirus play, but because their most popular drug is Humira, and it's the coronavirus. Everybody's trying to look for a coronavirus vaccine. So this company dipped along with the rest of the market, so 17% and down 18% for the past 3 months. I'm just holding on here. Shell, $29.51. Let's take a look at my business. I have 100 shares of share for an average cost of $30, and my portfolio diversity is 11%. So I am down $99 with this company, and at one point I think this company got all the way down to about $23. So $45 from March 4th all the way down to $19. So Shell has lost pretty much half of its revenue, half of its market cap, going all the way down to $20. And I never thought I would see the day where her Shell was $20. I know the PE ratio for $20 has got to be out of this world. It's got to be like maybe about 5 times earnings, and with a dividend yield of probably like 13%. Those are absolutely insane and staggering numbers. If you bought that $19 dip, you're probably sitting pretty good right now, because Shell is a company that I really like. I kept buying a lot of shares, and I think in one of the Robinhood portfolio videos that I posted, I said that oil did tank the portfolio, and I had to make up that loss. And oil has not been doing well due to this coronavirus. A lot of stocks have not been doing well, but Shell in general, I have a portfolio diversity of 11%. I want to be careful. I don't want this to be over 15%. I don't like my companies being over 15% of a portfolio diversity, but Shell, they haven't not cut their dividends since World War II, and I'm really confident that this company will continue to maintain that dividend. So this is $94 each, and not each month, but for every 3 months quarterly, this will pay $94, and they have not cut their dividends since World War II. So this could be a steal looking at a long-term play, and I think one of the oil companies did cut their dividend. I think it was Occidental Petroleum. So they did cut their dividend, and the stock is maybe worth about $10 or so. That's very interesting to see, and you have to really be careful of these dividend traps, because the markets have sold off, and a lot of companies are starting to suspend their dividends. They're starting to cut their dividends. I think Boeing suspend their dividends. So you got to be careful about these dividend traps if you're going to buy these companies at pretty good valuations. So, but I bought Shell. They have not cut their dividends since World War II. I'm pretty safe here. At least I think I'm safe with Shell. And if it gets back down to $20, I'm definitely buying more. So AT&T, $29. My average cost is $36.31. So this was not a good buy. I am down $659, and there's really not much to say about them other than, I thought that, telecom stocks would do pretty well during this pandemic outbreak, but I was wrong about that. AT&T dipped along with the rest of the market down 20%. At first, it was holding the fort very well. It was only by the time March let's take a look. March 13th came. It was only down 7%, but I think AT&T received two downgrades not too long ago, and that's what caused the stock to go down. So due to the company underperforming due to coronavirus, it was a pair of downgrades. So I have a portfolio diversity of 11. My average cost is 36, so I overpaid a little bit for AT&T, but I can always average down on this position and still get that nice juicy dividend because I don't think they're going to cut their dividend either. I think this is another dividend aristocrat, may be wrong, but I'm really safe with Shell. I mean, excuse me, I'm really happy with AT&T as far as them maintaining the dividend. So I go Coca-Cola, $42.80, and I have an average cost of $39.67. So I think I may have sold off Altria, and move that Altria money into either, I think either AT&T or Coca-Cola, because those are much safer, telecom and consumer staples that I think is going to do very well during this outbreak. I have an average cost of 39. Once KO got down to $37, I actually started buying some Coca-Cola, and I will continue to buy some more Coca-Cola. I think in one of the previous Robinhood portfolio videos, that was actually the plan, was to use my dividends on Coca-Cola and just keep throwing money into Coca-Cola because it is a dividend champion. They have not cut their dividend yield from as far back as I can remember. I don't even think they ever done it for like the last 50 years or so. So this is another play that I'm doing. I'm trying to be as safe as possible with it. I'm trying to humble myself. I pretty much sold the high PE ratio tech companies that I had, the Amazons, the Facebooks, the Texas Instruments, all the overvalued stocks, and getting into more of these really good plays here. I like the Home Depot at a 12 times earnings, absolutely killing it with Home Depot. But Coca-Cola, yeah, I'm doing really well with them. I'm up 7%, even though my portfolio tanked. So I think that's really good to see. Home Depot, I just mentioned them, 189. I have an average cost of 20 shares for an average cost of 153. So like I was saying, Home Depot got all the way down to 153, and I think PE ratio of a 153 may be around 13 or so, maybe like 12. Absolute steal. Absolutely, that was a steal. I had to put some money into Home Depot, and I think I sold off maybe Disney and some other company. I saw off a lot of companies because, again, guys, when the markets are tanking and you have to take advantage of these the better company. I'm not saying that Disney's better than Home Depot, but Home Depot was trading at a discount that was a discount and a valuation that appealed to me more than a Disney. Like Disney as they have a Disney Plus, which has a lot going for it. But Home Depot is the company that I want to be in, and I have an average cost of 153, and the stock just shot up after that stimulus bill. A lot of companies shot up because of that stimulus bill, and the market really did like that the government is putting money back into the economy, so the economy won't suffer as much as it has been suffering. So up 26% for the past week. So that is absolutely insane. Home Depot, a pretty good company. JP Morgan Chase, $90. I have an average cost of 92. This is just a pure bank play. I want to be into the big banks, like Bank of America, Wells Fargo, JP Morgan Chase, and I think JP Morgan Chase is one of the more popular banks among those three. I think that Bank of America, they have some customer service problems, but I don't see them going away anytime soon. Wells Fargo, the same way, they have that fraud stuff that was going on back in 2016, that they have some issues that they have to sort out. But JP Morgan Chase continues to rock it. Very low P ratio, obviously, because of the financial crisis years ago, and they have a dividend yield that's really good. It's very attractive, very low valuation, and very nice pricing point to be at with JP Morgan Chase, and I feel very good buying some more shares up. I want to be careful. I don't want the portfolio diversity to get past 15%, so I'm not going to buy too much of this, but I just want to be in those big banks. And even if I don't think the banks are going to fail like they did back in 2008, because like they have policies in place to prevent that. So let's keep going here. PPL, I have $26.20 on my screen, and I'm looking at my position. I have 110 shares for an average cost of $23.23. So again, that portfolio diversity is just under 15%, and my total return is 12%. I bought PPL because it just fit what the portfolio was. Or at least it fit what I was looking for. I was looking for a cheap utility stock that was pretty much PPL was oversold. It was oversold, and it was undervalued due to P ratio dipping to like 8. So a lot of these companies started to get at reasonable prices, and I'm starting to rotate that money around into companies that have extremely fair value. And that's going to pay me a nice dividend while I sit and wait as the coronavirus keeps getting worse and worse by the day. But I feel like eventually, we're going to figure out a plan to contain this virus and quarantine this virus so it won't affect anybody else. And my heart goes out to all the people who have suffered underneath this virus. And I just hope that there is a solution down the road. So I continue to put money into PPL and continue to take advantage of those low discounts. I think I talked about Home Depot. I'm not really sure why Home Depot is here. I don't know what's going on with my phone. I think that may be it. No, that's not it. There's one more company that I have to review. National Retail Properties, $34.25. An excellent, well-diversified real estate investment trust that has a strong balance sheet. I have a average cost of $30. So again, it's another one of those companies that, it was very difficult to buy this company due to the valuation and, the PE ratio. But like the rest of the market, it just tanked and it got all the way down to half its value was gone. So if you bought National Retail Properties at $26.40, you're probably looking pretty good right now. This was not the company I really wanted. I'm going to review that company that I really actually want to put into the portfolio, and that was ticker symbol O. Unfortunately, I missed the dip for ticker symbol O. It got all the way down to $42.50, and it lost 42% of its value, and then it just recently creeped back up due to that stimulus bill. So I really wanted this company, but unfortunately, I was too late to act because I was not looking at my portfolio every day. I try to just tune everything out so I don't make unnecessary moves. And this is a great company along with ticker symbol NNN. I think that ticker symbol O has a stronger balance sheet than ticker symbol NNN, but I don't mind paying for NNN at this rate because it's pretty much O in that regard. It's not as well position as O, but it's very, very close, and I don't mind paying for a ticker symbol and National Retail Properties to still get paid a pretty nice dividend. And this is a company that's a buy or underneath $30 or so. So I definitely like to have some real estate exposure, and this is the stock that I want to do it on. So. And I think that is it for my portfolio, guys. I know I made a lot of changes, and it's all about trying to humble yourself. I got carried away, and everybody I just started buying stocks, and I lost my money. So you guys can see it. I'm down 14%. For the past 3 months, I'm down 21%. So my advice is just not to look at your portfolio every day and try not to make any unnecessary moves, because there's going to be more volatility ahead. The government has pretty much announced quarantine. Everything's shut down. You can't walk into a restaurant and sit down and enjoy yourself. If you go to the market, I went to the market. I had to wake up pretty much at 6:00 just to go to the market, because had I gone to the market at 10 o'clock, there would be no milk, there would be no eggs, toilet paper definitely would not be there, any paper products would be gone, hand sanitizers will be pretty much off the shelves. Everyone's losing their minds. They're fighting over paper, they're fighting over hand sanitizer, they're fighting over bleach. It is some really dark times out there, and I just hope everybody is hanging their head above the water, not swimming with the sharks, and just trying to protect their families as well as they can with having all the necessary essentials to do that. So I'm going ahead and cut the video here, guys. I just wanted to review my Robinhood portfolio. I'm not doing doing well, along with virtually everybody else who's been just holding out here. But again, I just hope that a lot of this stuff that's been going on, it probably will not last as much as it has been lasting. So I'm going to cut the video, and I'll see you guys next time.